Hello, I'm Habib Rawahni. I will present this paper for the Qualitative Research course. Uh, this research this research paper was published in 2017 and talked about qualitative inquiry into Islamic home financing evidence from Malaysia. Uh, Contents abstract, then introduction, after that literature review and research methodology. Finally, results. Abstract. The purpose of this paper is explore the development of Islamic home financing, some of its practical issues. In addition, the study also intends to draw attention to some recommendations to the issues highlighted from viewpoint of industrial experts. The methodology the methodology for this study follows the qualitative research approach, which aims to capture the thoughts and extensive knowledge of a few related experts in the field. Eight respondents, who are mainly scholars and bankers in Islamic banking, were selected for the interview purpose. A semi-structured interview was adopted in order to investigate a series of themes concerning the Islamic home financing in Malaysia. The, the findings shows that majority of the participants agreed that the Islamic banking and finance IPF is developing in the line with its counterpart, the, con- the conventional banks. This is due to its innovations in products as well as offering vari- v- variety of financial products including home financing. The following research questions have been developed. First one, to explore the current development of IPF of and conventional home financing. Then to survey the societal acceptance level of Islamic home financing in Malaysia. Three, to identify the problems in conventional home financing and determine how Islamic home financing helps to solve the problems of its conventional counterparts. Four, to investigate the issues in Islamic and conventional home financing in Malaysia. Five, to make recommendations from industrial experts in addressing those problems. This study claims two major contributions out of its investigation. One, exploring the issues of home financing will give a general overview of the recent development in Islamic banking and its surrounding issues, which is expected to indirectly help policymakers and bankers to design a better policy in dealing with Islamic home financing and its issues. Two, the review literatures suggests the common norm of researchers to mainly focus on quantitative approach instead of qualitative approach in dealing with the matter. Literature review. General overview conventional home loans. According to Kettle 2010, the conventional bank solely focuses on profit maximization from the implementation of interest riba in banking, which can be based on fixed or floating rates. The conventional home financing is based on a debtor and creditor relationship, whereby the customer is obligated to pay the entire financing amount borrowed from the commercial bank, together with the interest agreed upon. Here, the risk is entirely borne by the customer in the case of default payments or losses in the underlying assets. The customer having to gain or lose from the underlying assets is still required to pay back the entire loan amount to commercial bank. Shown below is the basic operation of a conventional home loan in Malaysia. Review of literature on BB home financing. The most common Islamic home financing scheme in Malaysia is the Buy Bitaman Agile or BBA in short. BBA operates based on the concept of Murabaha financing, meaning a cost plus markup sale. The term buy refers to sale, بثمن as price, Agile as conventional customer house banks deferred, which sums up the definition of PVA as a transaction of sale with deferred payment. Initially, the bank will purchase the residential property on behalf of the payer that approaches the Islamic bank for financing. The Islamic bank will then sell back the accurate house to the customer with a markup, cost, or profit. The customers pays the bank by means periodic payments set by the bank. The illustration below shows the procedure or modus operandi of the BBA in Malaysia. Review of literature on مشاركة متناقصة MM. The practice of diminishing مشاركة متناقصة MM home financing serves as a better alternative for the widely criticized PPA concepts. MM started gaining popularity in Malaysia and globally by applying practices that are more closely related to Sharia law. The MM is a form of joint partnership between the Islamic Bank and its customers that uses the idea of profit and loss sharing distributed between the bank and its customers at the specified ratio. Below is an illusion of modus operandi in diminishing musharaka home financing process of diminishing musharaka. Research methodology. This study adopts a qualitative research method in collecting data. A qualitative approach is used in this research because of the relatively new and uncertain factors yet to be discovered in the topic of Islamic versus conventional home financing. This study believes that the topic requires the knowledge of experts in the related field in order to develop a further understanding of the subject matter in question. A semi-structured face-to-face interview is the primary source of data collection used in this study. The semi-structured interview process is outlined below. Results. Basically, the developments are based on government support. The value from the government and bank itself help level the playing field with conventional banks. The external push from Malaysian government, such as discount and remission on stamp duty waivers for Islamic home financing, is what drives to growth of Islamic products in Malaysia, especially Islamic home financing. The home financing products offered by Islamic banks are currently paired with conventional banks in terms of value position, system, and operation. For example, Islamic home products are able to do cash withdrawal now, which is similar to conventional home loans. Hence, the value positions of Islamic products now are what drive customers to choose Islamic home financing. But there's a lot of growth of acceptance in the society in Malaysia. For Muslim, we can't undertake riba interest rate, and that's what they opt for Islamic products. Conventional home loans are still the widely favored by the public, regardless of the Muslims and non-Muslims, due to the many complication terms and operational system in Islamic products. Islamic offers a various range of products and therefore may lead confusion and complexity in understanding the product itself. As Islamic products are also still relatively new, some may not be that confident yet in Islamic products itself. Some products have their own uniqueness due to Sharia compliance and BBA and MM having ceiling rate, which makes the product attractive compared to conventional because of the product structure and nature. Islamic products don't reprice, and that is advantage. When customers default in conventional home loans, there will be repricing. However, as I mentioned earlier, Islamic would not have any repricing in terms of default payments. Thus, it is a plus factor for customers. The variation of interest clause in conventional banks is very strong clause to enable conventional banks to make change unexpectedly, which may burden the customers. The recommendations given by the respondents to deal with the problems highlighted, including encouraging customer to use home financing instead of PPA financing, setting a proper benchmark for IPF instead of relying on the conventional one, and increasing transparency by product disclosure to ensure customer awareness confidence and confidence in the products they subscribe to. Moreover, strengthening due diligence is important to overcome the of credibility among customers, among others. The respondents also discussed the legal aspects of the banking sector, citing the issue of legal ownership and risk sharing in model. The experts have suggested for Islamic Bank to participate in joint ventures with developers, which is seen as an effective way in future developments of the model. However, in reality, banks don't want to put themselves at risk, therefore resulting in similar practices to conventional banks. Thank you for your attention.